Good afternoon. My name's Stephen Herwire. I'm the owner of Herwire Financial Plans with Direction. Today is September 8th of 2023. Today, after the weekly roundup, we are going to talk about Life Insurance Awareness Month. So as of last night, the Dow Jones Industrial Average closed at 34,500.73, up 3.85% for the year. S&P 500 closed at 4,452.54, year-to-date up almost 16%. NASDAQ 100 closed at 15,260.86, year-to-date it's up over 41%. Gold closed at $1,919.57 per ounce, year-to-date is up a little over 5.25%. Bitcoin index closed at 25,877.4, year-to-date up 56.26%. US dollar index closed at 105.05, year-to-date up a little over 1.5%. 10-year treasury closed at 4.29%. It's up 0.41% for the year. S&P aggregate bond index closed at 197.16. Year to date, it is up a little over 1%. Life insurance. What is it used for? It's primarily used to transfer financial risk involved in death to an insurance company. That means when somebody dies, those who could be financially affected receive money. So if the breadwinner in a family dies, monies are available to make up for part or maybe all of a loss. Another example is if a key person at a corporation dies, monies are available to tide the company over during the search for their replacement. It can also be used to fund buy-sell agreements between partners or shareholders in a corporation. Sometimes it has to be used to pay estate and inheritance taxes. It can be used as a cash accumulation vehicle with a death benefit. And it can be set up to provide for long-term care needs. There's lots of other possibilities, but these are the major ones. Okay, there's two basic types, temporary and permanent. Temporary, everyone knows as term insurance. Permanent has two major types, whole life and universal life. There's a whole bunch of iterations there, but we're not going to get into that. Term has no cash component. Permanent has a cash component most of the time. So let's talk about term insurance. Generally speaking, it's the lowest monthly cost. It's like renting an apartment. As long as you pay the premiums, the coverage remains in force. Just like when you rent an apartment, as long as you pay the rent, you get to stay. But periodically, the premiums will go up. Now, on the outset of the policy, you can set the premium for a specified period of time. You can set it for annual renewable term, which means it goes up every year. And this is the lowest initial monthly cost. Or you can set it for 10, 20, or 30-year terms. It varies all over the place, and keep in mind, the longer you set the term for, the more it's going to cost per month. Like a 20-year level term is going to cost less than a 30-year level term, but it's going to cost more than a 10-year level term, all other things being equal. But at some point, the premiums will rise dramatically. In some states like New York, term goes away at a specific age. It doesn't have a cash component. It's like homeowners insurance. You don't have a claim, there's not going to be a payout. Permanent insurance, like I said before, two major varieties, whole life and universal life. This is more like getting a mortgage on a house. With a whole life policy, premiums are set and do not change, and it has almost no flexibility. Generally speaking, it has the highest regular premium, and it's guaranteed to stay in force as long as the premium schedule is followed. Universal life. It's got a lot more flexibility. It'll stay in force longer, generally speaking, than a term policy, but unlike whole, it's not guaranteed generally beyond a specific time. Unlike whole life, you can add extra money as needed up to a point, and this might be necessary in later stages to keep the policy in force. Both types have the possibility of adding a long-term care rider to take care of you if you're not dead, but you can't take care of yourself. A lot of people say to me, Steve, my company gives me life insurance, or I buy it through my employer. And I say, great. Many companies do provide life insurance for their employees. The amount and types vary. Now, if the company gives you more than a certain amount, and these days I think it's about $50,000, anything over that they give you that you're not paying for could possibly be a taxable event. Don't get me wrong, it's still a good deal, but just keep in mind that this could happen. And you can usually purchase more, use usually a set multiple of salary. Sometimes it's a percentage. And generally speaking, it goes away when you change jobs or retire. Some states do have a requirement that for a very limited time after you terminate, you can purchase the same amount of coverage with no underwriting. Guaranteed issue life insurance. This is one of the commonly advertised ones on TV. They're talking about a small benefit, premiums will never change, and they say it's so much per unit. Okay, these usually have a limited benefit. Now, there's two ways that they can and do limit the benefits. Sometimes you're just limited to how much insurance you can get. The biggest policy I've seen for one of these types of insurances is $35,000 death benefit. The other, depending on your situation, it could have no benefit other than the refund of premiums plus interest for an initial period, like say 2 or 3 years. So, you know, if you're buying one of these thinking, okay, yeah, I've got a terminal illness, or I expect I'm going to die quickly, but my family will get a big settlement. If you don't live 2 or 3 years, you may not. Check with the insurance agent prior to buying it. And this is usually the most expensive per unit of coverage of any of the types of life insurance. Okay, when an agent gives you a quote for a policy, it is a best guess, because until the insurance company gets through the underwriting process and the policy is issued, it's not set in stone. There's 3 basic grades that influence the cost of insurance. There is standard, which means you got a few problems, but they're not too serious. Then there's rated. It means you've got some significant problems, but the insurance company will still insure you. And then there's preferred, means you're in really good health. It's cheaper than standard. And rated is more expensive than standard. There's usually a contestability period where the insurance company can refuse to pay under certain limited and specific circumstances. Life insurance gets more expensive as you get older. Tobacco use will usually make the cost higher. And generally speaking, all things being equal, meaning policy size, health, and company, a man is going to pay more than a woman for the same amount of life insurance, because statistically speaking, women live significantly longer than men. Okay, if you're going to buy life insurance, at the very least, buy enough to replace your salary. Now, keep in mind, this is a vague estimate. It does not take into account various life circumstances. Everyone's got a different situation. 2 guys could be working at the factory, same job, same pay. One guy has 3 children, and the other guy is married with a wife that has a great job. It's likely those 2 guys are going to need 2 different amounts of life insurance. Needs analysis can help you determine the appropriate amount for your situation. This will focus it somewhat, but the best way to do it, in my opinion, is to do a full-blown financial plan. The financial plan figures this all out because it takes into account not only your current circumstances, but your hopes, dreams, and goals for you and your family. Consult your qualified advisor to determine if you have enough life insurance for your situation. If you're worried about getting more insurance because you're scared of getting a medical exam, sometimes a medical exam is not required. And if you don't have a qualified advisor, contact me. I may be able to help. I am licensed in multiple states. There's no charge for the call. Okay, I usually talk about the different stages of life here. Here, we're primarily talking about working years, okay? The younger you are when you get this, the cheaper it's going to be. And the other thing is, if you get it and then later on you find out you've got some awful condition, the insurance company's still on the hook. back when COVID came out, there were people saying, oh, life insurance companies won't pay your benefit if you die of COVID. No, that's just not true. You know, the only way that would be true is if you were applying while having COVID and you didn't tell them about it. I can be reached at herwirefinancial.com. I do in person, I do Zoom, and I do phone appointments. I'm licensed and registered across several states. And if there's a need, I can add states pretty easily. If you'd like to schedule an appointment, click on the schedule an appointment button in the upper right-hand corner, and you can get any of those types. Want to see more videos like this? Click on my YouTube channel. Please like and subscribe. Also, encourage your friends to follow me on Facebook, LinkedIn, and Twitter, now known as X. Want to reach me by phone, 518-631-2569. Do not text me there. It won't reach me. There's another text number there on the screen. Okay, opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. Variable universal life and variable life insurance policies are subject to substantial fees and charges. Policy values will fluctuate and are subject to market risk and a possible loss of principal. Guarantees for every insurance product are based on the claims paying ability of the issuer. If the insurance company goes under, the guarantees go with them. Both loans and withdrawals from a permanent life insurance policy may be subject to penalties and fees, along with any accrued loan interest will reduce the policy's account value and death benefit. Withdrawals are taxed only to the extent they exceed the policy owner's cost basis. And usually loans are free from current federal taxation. A policy loan could result in tax consequences if the policy lapses or is surrendered while the loan's outstanding. Riders are additional guarantee options that are available to an annuity or life insurance contract holder. While some riders are part of the existing contract, others may carry additional fees, charges, and restrictions, and the policyholder should review their contract carefully before purchasing. Oh, no Facebook next week on the 15th, by the way. This material contains only general descriptions, not a solicitation to sell any insurance product or security. More information about specific needs or situations, contact your insurance agent. We are educating you about insurance generally and not providing personal service. It doesn't take into account your personal characteristics, such as budget, assets, risk tolerance, family situation, or activities which may affect the type of insurance that will be right for you. In addition, state insurance laws and insurance underwriting rules may affect available coverage and its cost. If you need more information, contact that insurance professional. You may also visit your state's insurance department for more information. And as I said before, guarantees are based on the claims paying ability of the issuing company. Have a great weekend.